Right, in this video, I'm going to go over the S&P Along for the Ride trade idea um, and show you some examples. So what I look for is the S&P 500 index. So you can use like Yahoo Finance or TD Ameritrade, etc. But I use the S&P 500 index, not the futures. You can probably use the futures as well. I use the index, the past performance, etc., has been based off of the index. But you look at the market at 10 a.m. Eastern time, which is more like 9:59 and 50 seconds. And the reason for that is news comes out at 10 a.m. sometimes, and you want to have your number prior to that. So we'll look at an up trade here first, and then the same is for the downside as well, as far as points and so forth. But it is for the entire day. So it's an S&P long for the ride. So the idea is if it's up 15 points at 10 a.m., you have a potential of a long trade. You just need confirmation through 10:10, which I'll get to in just a second. Same thing on the downside, again, down at least 15 points. Now this is up from yesterday's close. So the reason I look at like TD Ameritrade or Yahoo Finance, etc., Google Finance, whatever, they're going to tell you how much the S&P is up for the day. They're not going to say, excuse me, since the last close. So if today is a Thursday, they're going to say the market's up 23 points from yesterday's close. They don't go based on the 9:30 open. They go based on the close. So it's a close to 10 a.m. Trade. So up 15 points. So that way you don't have to calculate different things from 9:30 open and all that stuff. So so what you see on like a Yahoo Finance, etc., or TD Ameritrade is what you're looking at. So the 15 points, and then we're going to go into some more detail. So we're going to look at a long trade first. So this particular trade happened on Monday, the 13th of February of 2023, but this was the close on Friday. I'm looking at the mini for the S&P right here, but you'll see it closed at 4,100. So the 16 right there is 4,100. And then if you scroll over to the Monday at 10 a.m., which is right here, you'll see it's at 41.23. So it's up about 23 points. Again, this is about the same as it was in the index itself, but we're just looking at the futures for this video. So we're up 23 points. So that's at 10 a.m. So what you need is you need some confirmation. So a lot of times what happens, and I'll show you some of those examples as well, but you'll have it up or down, 15 points, but it'll never break that particular high. So and at 10:07, sometimes the market kind of tops out or bottoms out, etc. So we want to protect ourselves and make sure we get some confirmation. So at 10 a.m., it's at 41.23. This is a 5-minute chart. So 10:05 and 10:10. Here, the highs of these two bars, you're up to 41.25. So what would be considered confirmation is a break above the 41.25 area. You want it to sustain it, not be a 1-minute quick spike, which we talked about in a previous video. But so in this particular bar, the 10:30 a.m. bar, here is where you got your confirmation breakout. So that is the long, which makes this area, the 10 a.m. area, actually your long position. Now the difference between the 10 a.m. price, which was 41.23, and where the breakout was, actually in this case, was not very big, only a little over 2 points. So the idea would be long position here and holding it for the rest of the day. In this particular case, it worked out well. Got all the way and closed up here at 41.48 basically. So from 41.25 to 41.48, you had like no heat at all, and it was up 20 plus points and a nice trade. So that's the idea. That's kind of a picture perfect example. The long side is going to be historically better than the downside. I'll show you a down trade here in a little bit as well, but that is the idea. You want to have the confirmation. You want to see that happen. So that is a good example of the S&P along for the ride. Upside. And here's another trade I want to go over. This one is on actually the 9th of February, but we're going to look at February 8th first, the close. 41.29 is the close there. And then if I scroll up to 10 a.m. on the 9th, which is right, so what I say, 41. So it's at 41.29 at close of the previous day. 10 a.m. here, it's at 41.54. So there's a difference of what, 25 points. So it's up about 25 points on the day. So it's an up trade, remember, but you want to have confirmation. Now, the high, this is the open right here. The 935 bar here is the open. It actually never broke the high from, so this is actually up here is where you would be buying it from, because again, we're looking for confirmation, we're looking for a trend, and even though it's up, whatever it was, 25, 26 points at 10 a.m., it is still not at its high. So you would want to see you would want to be buying it up here at the 41.67 area. So this is why we use the confirmation, and we just don't blindly go in at 10 a.m. Hey, it's up 26 points. Let's just buy it. We want to see the confirmation. The whole thing is S&P along for the ride. So if it's not going to ride that way, then we don't want a part of it. So the idea here is you would have a position up here to be buying it. Again, you don't want the one tick or 1 minute kind of spike and then come back down. But the area we would be buying it would be 41.67 or so, and it never got there. As you can see, the open was basically the high of the day. So what this does, that confirmation, it keeps you out of these type of trades. So even though the market was up, basically gapped up and then just filled the gap and went down and then some. So it keeps you out of those trades. And I'll show you some additional examples as well where it gets a little tricky here. Before I get into the trickier ones, I want to show you an example of a down trade. So again, the idea behind the system is you look for 15 points, in this case on the downside, 10 a.m. And then if you got confirmation, you keep doing it, keep going in that direction. So this one is actually the 17th of February was a Friday. Market closed around 40.88, I think, on the future, something like that. The markets were closed on Monday due to President's Day. So the 21st, which was Tuesday, is actually your next trading day. So even though the futures are kind of open and all that stuff, you still go based off of Friday's close. So in this case, the market at 10 a.m. was right around 40.40, we'll call it. So it was down roughly 48 points or thereabouts for the day since Friday's close. And then again, you look for 10.10 price. So this is at 10.05. So the market went all the way down to 40.35.50. So here it was at 40.39.50, dropped some, but you want to have confirmation after 10.10. And you can see the 5-minute chart. You finally got confirmation, so you'd be selling it right around the 40.35 area. In this particular case, it bounced up and so forth. Now, if you're trading this via futures, you're going to have really large stops. You're going to have some really big losses. You're going to have some really big gains. So in today's case, in this example I'm going to show you here, this was about a 30-point gain. So 40.35 or so. So you had some heat, got up, you're down about 5 points, and then it closed, right around here at 40.06 or so. So right around 30 points of profit. But there will be days where, you could lose 50 or 60 or 70 points. But a lot of those times, those are the ones you can avoid because, it spiked down for that minute, and so forth, which you can watch in a different video. But it is not a foolproof type of trading thing. Again, the upside is going to be, in general, more profitable as far as the number of wins and so forth. I think 2021 was, 2022 was right around 70% win rate. But the points are going to vary. So however you want to risk that is up to you. But these are trade ideas for you to run with and things to look for. So that is an example of a really nice down trade. The ones that you want to see were kind of like that up trade. You saw it happened. The confirmation came around 10:30. This one happened, 10:12 or something like that, where you got the confirmation fairly quickly. Those tend to be the best trending type of opportunities when you can get your confirmation, say, before 11 a.m. Not always, but that's in general. If you're going to get confirmation like those two, better chance of getting big wins on those cents. Now, the other thing to look out for, you can also trade this on Nadex if you so desire. Now, Nadex has changed a lot for various reasons, which I won't get into this video, but you can do, up trades and buy and sell trades on that for this as well. But I do want to show you some of the trickier ones here now. So again, the win rate is going to be based on, what the price is at 10 a.m. versus price at close. So, if it's an up day and gets a confirmation, it's based on the 10 a.m. price. Now, what can happen, though, is the difference between the 10 a.m. price and your confirmation price could be vastly different. So 10 a.m. price, the market might be up 20 points, and then by 10:10, it's already up 30 points. So the difference between 10 a.m. price and the 10:10 price is 10 points. And then throughout the day, the thing can move around and so forth. And it's possible where you could potentially win the trade, how it's set up, because it's set up based on the 10 a.m. price, but lose your particular trade. So, and how you want to do that is up to you. So in the previous chart I showed you, on the downside, if you wanted to put your trade in for the 10 a.m. price, you would have got filled because you had some heat and the whole thing. The previous trade on the up trade, it never had any heat, so it would have never came back down to that 10 a.m. price or very close to it. So in this case, at 10 a.m., it was right here, right around 41.26, 41.26 and a quarter. That is actually down about 22 points for the day at 10 a.m. So this would be a sell trade. Now here is your low for the day so far, the 945 bar here. So this is actually right here is where you would be selling it, which is all the way down at 41.1450. So say 41.14 versus 41.26 is for easy math. So there's a 12-point difference between the 10 a.m. price and the confirmation price, right? So if you're selling it here and you're holding it for the whole rest of the day, at 4 o'clock, it closed at 41.20, we'll call it 23. So 41.23. So that's a loss of what, 9 points, something like that. So versus, we'll call this 17, 16. Oh no, that's the low. So right here, yeah, right here is where you would sell it. So around 16. So your sell would be right around 41.16. And then the 10 a.m. price was 26. So 10-point difference. So 16. So you sold it at 16, and then you got out at close at 23. So 7 points. So you lost 7 points. You shorted it here, and you exited it here. However, if you based it on the 10 a.m. price, which again, what the trade idea is based on, you're selling at 41.26 and you're exiting at close, which again is at 23. So you won the trade. So quote unquote, the system was correct in predicting that it was down from 10 a.m. to close after you got your confirmation. However, the difference between the confirmation price and your sell price made a difference. So what I do when I do my statistics at the end of the year is I count these. So it's a win on the system. It's a loss if you traded it down here based on the confirmation. So what I do on those is I keep those separate. So when I mentioned, a 70% win rate on the upside, that's not including these up-down situations, because it really depends on how you did it. So in this case, if you did, okay, you had your confirmation and said, okay, it's going to be a sell trade. If you waited up here, you could have got your 10 a.m. price and made your 3 points. So again, the upside is going to be much better. You're not always going to have it where it comes back in this case. The Nadex works well with that, or if you have some options or something that you're targeting a certain price for the S&P, those are things you can watch for. But the win rate is decent on the upside. Again, watch for those 1 minute tick downs as they can show turning points in the market. But it's S&P long for the ride is something I've traded for many, many years now. It's tended to have year over year a pretty good win rate, especially on the upside year over year. So hopefully this is helpful. If you have any questions, drop them in the comments section, and I'll talk to you in the next video. Take care.